Congratulations! You found the Pirls Stock Market Commentary for September 27th, 2015. Market breadth. With this past week's market decline, our bull-bear point and figure ratio fell from 0.68 to 0.40, moving deeper into bearish territory. The total count of securities in bullish or bearish patterns fell 3% to 2,814. The count of bearish stocks increased 16%, while the count of stocks in bullish patterns decreased 31%. The Pirls PNF Market Breadth Summary Chart shows us a market now 18 consecutive weeks in bearish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive our free information, simply visit s2pmarketsignal.com Market Commentary and enter your email address in the appropriate space. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 13 points for the first decline in 4 weeks. At a negative 500.46 points, it continues below all 8 tops above plus 100, continues above the August 2015 bottom, the October 2014 bottom, continues above the May 2014, October 2014, and January 2015 bottoms, and below the remaining 2 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 3 accumulation days and 4 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in distribution mode on higher average daily volume. Momentum. The CCI 20 daily, now in a Woody's uptrend, has fallen to minus 93.83, outside the plus or minus 50 range required for a valid zero-line reject long entry signal, and has 4 consecutive days below zero for a possible trend reversal this coming week. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's downtrend 1 week ago, while the daily CCI 20 began a Woody's uptrend 1 week ago. Now in a Woody's downtrend, the CCI 20 weekly has fallen to minus 124.30 from minus 77.92 last week, continuing outside the plus or minus 50 range required for a valid zero-line reject short entry signal. Industry rotation the last 2 weeks. 4 of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish REITs continues in the top 5. S&P Retail and Comp Tech have re-entered the top 5. Brokers and KBW Bank have left the bottom 5. Bearish semis and disk drives have entered the bottom 5. Gold and silver continues to lead the top 5. Computer hardware has entered the bottom 5. Oil services has left the bottom 5. Focus this week from www.armstrongeconomics.com. Did gold survive the Depression? In which prominent economic trends forecaster Martin Armstrong systematically debunks the gold is money crowd. The following are some of his key points. Some people totally confuse gold and money. You need to separate money from gold, or you will never understand how the economy functions, and you will buy gold when you should be selling. If you do not get this one right, forget it. You are not ready to invest. Gold moved opposite of silver between 1929 and 1932 only because it was then money. So, if you think a crash means that gold will rise, you are in for a very rude awakening. The government confiscated gold and moved to a two-tier monetary system with gold used exclusively for international settlements, not domestic. Gold rose in purchasing power between 1929 and 1932 simply because it was money at that time. The gold promoters do not understand that gold is no longer money, and therefore it will not rise in purchasing power in the event of a crash. Devalue whatever is money, and all assets rise, be it real estate, stocks, or commodities. It is assets against money, regardless of what it might be at that moment in time. Today, gold will decline with commodities against money, and then it will rise when people lose confidence in government after realizing that there is a sovereign debt crisis. Money is just a unit or account and a medium of exchange that everyone must agree on. You can tell the world that metals are money, but when you are starving and trying to convince someone who does not believe in your religion to give you food in exchange for metals, good luck. You cannot dictate to the world what you think should be money. This is not a bubble where metals will replace the dollar. This is a bubble in government. Regardless of what becomes money after this event, the dollar will not be the reserve currency and has nothing to do with paper. Gold declined with every dollar rally when it was not money and just a commodity, yet it rallied when there was a risk of banks failing, not QE 1 through 3. This clearly illustrates what the safe haven really is. People wrongly think that returning to some gold standard will stop the volatility and create the perfect world of Marxism by eliminating the business cycle. Returning to a gold standard today will not solve anything without political reform. Historically, any attempt to create a standard is the same as creating a peg. Gold will rise along with stocks and commodities against whatever is money. The safe haven will return only when the public questions the survivability of banks and government, not fiat and inflation. We are in the middle of a major crisis. All assets will rise against money, provided we do not go all the way to a Mad Max event, for then only food will have value. Far too many people assume capital will only move to gold. That is not true, for big money cannot move to gold and never will. They cannot store it, and it produces no income flow. Gold is for individuals, not big money. Gold rises only when there is uncertainty about government or the banking industry. It will not keep pace with inflation, and its fate is tied to the commodity sector. Money is whatever the majority accept at that point in time. Thank you for viewing this week's Sand to Pirls Stock Market Commentary, featuring the proprietary bull-bear point and figure ratio market breadth summary chart compiled by Donald Pirl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.